BRICS is rapidly distancing itself from Western financial supremacy by developing a transformative payment system that may soon include non-member countries, thereby posing a challenge to SWIFT's global influence. During a press conference in Almaty, Kazakhstan on April 11, following a meeting of the Commonwealth of Independent States Council of Foreign Ministers, Russian Foreign Minister Sergey Lavrov said that nations outside the BRICS coalition could soon take advantage of the alternative financial systems being considered by the group. He underscored the growing payment infrastructure within BRICS, which is focused on diminishing reliance on platforms dominated by the West, such as SWIFT. Lavrov stated that countries that are not members of the BRICS will have the possibility to use this payment system as soon as it is launched. He added, there are a number of other initiatives currently under consideration within the BRICS format, one of them being a proposal by Brazil to create an alternative payment platform with work underway on this track. I am confident that countries, even those outside BRICS, will have access to such mechanisms when they are created. Before I proceed, I encourage you to consider liking the video and don't forget to share your views on the topic in the comment section below. Your feedback is invaluable for us and a wider audience around the world. Lavrov's statement indicates a broader geopolitical ambition for BRICS to serve as a hub for emerging economies seeking alternatives to systems like SWIFT, which are mainly controlled by Western financial authorities. In outlining the practical steps taken, Lavrov cited Russia's domestic system as a viable model of financial autonomy. He explained there is an opportunity to form payment platforms independent of external influence. One example being the financial messaging system of the Bank of Russia. It is convenient and it does not depend on the SWIFT network. These statements emerge as BRICS nations actively seek to develop financial cooperation strategies, including the adoption of de-dollarization and digital blockchain currencies in response to rising geopolitical tensions and the reconfiguration of the global economy. But how will BRICS payment system help non-Western countries with cross-border payments without any hassle? The BRICS payment system aims to strengthen the autonomy of emerging economies in the face of the hegemony of the SWIFT payment system, often used by Western countries to blackmail others in Asia, Africa, and the Pacific. The BRICS payment system presents a compelling opportunity to support non-Western nations without coercion. It boasts distinctive characteristics including regional interoperability, which seeks to link the national payment systems of BRICS nations. The system is also open to non-member countries, with its framework designed to incorporate third-party states upon implementation. Additionally, it allows for the circumvention of sanctions, enabling commercial transactions to proceed without interference from US and European-dominated channels. Furthermore, it promotes the use of national currencies, facilitating transactions directly in the currencies of the participating countries rather than relying on the dollar. This initiative has the potential to draw in countries seeking to safeguard their international financial transactions beyond the influence of the Western sphere. In addition, BRICS payment system is meant to encourage de-dollarization. But how will BRICS Pay help de-dollarization? How is the regional interoperability of the national payment systems of BRICS countries already de-dollarized? In addition to its technological implications, BRICS Pay carries significant monetary considerations. The initiative to expand the system to additional countries aligns with a worldwide effort to reduce reliance on the US dollar. In this context, conversations about establishing a unified payment system utilizing a mix of national currencies demonstrate a desire to achieve national independence. Sergey Lavrov, in his address, emphasized the importance of creating an autonomous payment system that operates using national currencies and is free from Western oversight. The current proposals emphasize the integration of existing national payment systems with the BRICS payment system. Looks promising and can be faster process than operating a single payment system globally. Even BRICS countries are already using their national payment systems to trade in local currencies. For example, Russia is using its national payment system to trade in local currencies with other BRICS countries: China, Iran, India, Brazil, and South Africa. However, the dollar continues to account for a significant portion of global foreign exchange reserves, but the dollar's dominance is diminishing slowly. But why does BRICS not want to use the SWIFT banking system, which is already available for international trade? As a primary reserve currency globally, the dollar is significantly supported by SWIFT, which plays a crucial role in the international dollar framework. This system also provides the United States with a formidable instrument to influence its foreign policy. The US employs SWIFT as a means of enforcement, penalizing nations that do not comply with its directives by excluding them from the network. This was precisely the case for Russia following its military actions in Ukraine. Initially, officials suggested that Russia would remain connected to SWIFT. However, shortly thereafter, the United States, along with the European Union, the UK, and Canada, declared that Russian banks would be removed from the global payment system. The United States has a history of utilizing SWIFT and the dollar as tools to further its foreign policy objectives. In 2014, during the Obama administration, several Russian financial institutions were excluded from SWIFT as tensions escalated between the two nations over the situations in Ukraine and Crimea. Subsequently, the Trump administration issued threats to China in an effort to compel the nation to participate in sanctions against North Korea. Countries that maintain adversarial relations with the US may wish to reconsider their reliance on a system that necessitates American approval and the use of US dollars. In response to these actions, Russia has established its own payment system for international transactions. The System for Transmitting Financial Messages (SPFS) was initiated by Russia in 2014 following the US exclusion of Russian banks from SWIFT. By the end of 2020, 23 foreign banks had connected to the SPFS, primarily from developing nations and those with strained ties with the US, alongside institutions from Germany and Switzerland. Currently, the SPFS boasts 159 foreign participants from 20 countries. Likewise, China has created the Cross-Border Interbank Payments System (CIPS), and India has implemented the Structured Financial Messaging System (SFMS). The BRICS countries are looking to merge their individual national payment systems to establish a formidable alternative to SWIFT. The formation of an independent payment system is crucial for the BRICS bloc, as SWIFT has been weaponized. Many nations are perpetually at risk of US or European sanctions, which drives the need for an alternative system. The original intent of SWIFT was not to function within a sanctions framework, but the rules have since been modified to benefit certain parties. But why don't countries want to use the US dollar for international trade and reducing reserves? The efforts to leverage the dollar for the advancement of US foreign policies and to elevate American economic interests above those of other nations have been actually experienced, particularly by developing countries, which often struggle with reliance to external shocks. John B. Connolly, who was Treasury Secretary under President Nixon, once stated, "The dollar is our currency, but it's your problem." Although the dollar is a national currency, the United States exercises complete sovereignty over its monetary and fiscal policies, which can have worldwide effects. Nonetheless, there is no obligation for the US government to consult with other nations that may bear the brunt of the repercussions from its decisions. Furthermore, the international monetary system lacks the authority to regulate the behavior of countries that issue reserve currencies. This is indeed a global issue, leading many to explore alternative payment systems that BRICS can offer. As a result, more developing countries are striving to reduce their dependence on the dollar in international trade. Will the alternative payment system from BRICS affect the United States and the US dollar? Certainly, this development represents a direct threat to the dominance of the dollar. It will not only influence America's foreign policy capabilities, but could also speed up the trend of de-dollarization, resulting in substantial economic effects. At present, the global financial system operates primarily on dollars, requiring a significant amount of dollars to function effectively. The United States relies on this worldwide demand to support its high level of borrowing and spending. A move towards de-dollarization could create an excess of dollars in circulation. The US can borrow, spend, and maintain large budget deficits largely because of the dollar's position as the global reserve currency. This status fosters a persistent global demand for dollars and dollar-dominated assets, which helps absorb the money supply created by the Federal Reserve and preserves the dollar's strength despite inflationary measures taken by the Federal Reserves. But how much time will the BRICS payment system take to come into effect? The BRICS nations are already partially utilizing their own national payment systems for transactions among member countries. Russia has commenced business dealings with China, Iran, India, Brazil, and South Africa through these systems. The proposed BRICS payment system aims to unify these individual systems into a single platform, which will also be accessible to non-member nations. However, reaching a consensus on several standards will require considerable time for negotiations. The establishment of a BRICS payment system may progress slowly, serving as a contingency for countries facing sanctions. Ultimately, the system is expected to gain traction and be adopted by a significant portion of the global community. Thank you for watching, and don't forget to subscribe to our channel for new videos on important international topics.